Good evening, this is Brian Shannon from Alpha Trends Blogspot. It's Sunday, the 7th of January, 2007, and we're going to go ahead and take a look at some stocks for trading tomorrow. I'm getting this out to you a little bit later than usual because I was fighting traffic on 70 for a while today. But let's go ahead and take a look now, first of all, with the S&P 500, the spiders. As we noted in the closing comments on Friday, the market has clearly broken this uptrend line, and that tells us that the uptrend has been broken, but it doesn't mean the market has necessarily entered any type of bear market because we do still have this rising 50-day moving average. In fact, the longer-term trend is still higher. It's still innocent till proven guilty because we have that rising 50-day moving average. However, the intermediate term, we do see a series of lower highs and lower lows. So that tells us we have to be very cautious in here. And the short-term trend is just a mess. So this tells me right in here, looking at this 10-minute time frame, just in particular since the start of the new year, that this market is all over the place. There's no conviction from buyers or sellers in here, and the market is up for grabs after such a big, the market trend is up for grabs, that is, and after such a big rally, you would naturally think that the market is due for some kind of corrective action, whether that comes by pulling back price-wise or more through a time correction. We'll see. So let's just focus on the individual stocks. Starting out with GHDX. This is a stock we looked at last week. Had a profitable trade in it, but did get stopped out. However, it does look like it's setting up again. This is Genomic Health. And looking at the weekly time frame, you see that the stock had broken out past resistance at an all-time high just middle of November, and did so on big volume. It then pulled back on lighter volume right up to that rising 50-day moving average, where it looks like it's finding support and seeing volume coming into it once again. So when we look at a 10-minute time frame, here's what I think we can do with this stock. I think we could buy the stock above $19.80. I'm going to say it taking out this high from 2 days ago rather than this one here. But above $19.80, we could look to purchase the stock. Put a stop under Friday afternoon's low, so $19.38 would be where the stop goes. That gives us a 42-cent risk, and I think the stock can make it up to about $21.50 a share. That would give us a target, would be $1.70 away for 42 cents of risk. NightHawk NHWK, this is NightHawk Radiology, obviously in a nice uptrend here, found support near the rising 10-day moving average, then the 20-day moving average rather. And looking at the weekly time frame, here's a stock getting ready to see all-time highs once again as well. What we're going to do is target this high of $28 a share that was hit about 2.5 weeks ago. And looking for the purchase, what I'd like to see happen in here would be a pullback. I'd like to see it get down to about $25.85. If it can pull back towards that $25.85 level and then rally up above 26, that is a pullback down towards $25.85 or lower, and then buy it on strength as it rallies back up above 26, if that's to occur, we could then put our stop at $25.58 down near that 5-day moving average. That'd be a risk of, in this case, 42 cents, which is weird because that was the stop that I recommended on last stock. But this one, I think, for a move to $28 a share, that would give us a $2 upside for a 42-cent risk, making it a very worthwhile trade to consider. The next one is a small, low-price stock. This is called Zicorp, symbol ZICA, Z-I-C-A. You can see it had something happen here. I didn't bother to read the news, but something obviously changed people's perception of this company, and it really had a nice, orderly pullback to that rising 10-day moving average. The buyers came back into it Friday, couldn't really hold on quite that much, but it wasn't an unhealthy pullback intraday. If we look at the 5-minute time frame, you can see how it rallied up on the big volume and then low volume in here. So what I'd like to see is the stock to take out the $2.20 level. Getting above $2.20, I think you could then put your stop about $2.04 a share. So that's a risk of 16 cents. And the target in here would be just a test of this recent high. Obviously, a stock in an uptrend makes higher highs and higher lows. But with a target of $2.80, that would give us a potential of 60 cents of upside for just 16 cents of risk. Now let's take a look at some short sale candidates. Energy conversion devices, symbol ENER, is clearly in a downtrend. It broke down through support at $36 a share. That's really where the sellers took control about a week and a half ago. It's been a little bit choppy in here right now, but I do think that the stock has the potential to make it down towards this $32 even level. And looking at a 10-minute time frame, I'd like to see a rally just a little bit further higher, up to $33.35. And that's only a 6-cent rally, but it is a little bit of a rally. And then to sell it short below 33.20 as the downward momentum begins to build. Our stop would then go at $33.70, so that'd be 35 cents of potential risk. And looking for a target of $35 a share, we would then look at, a target of $32 a share. We'd be looking for $1.35 in profit. Last short we'll look at, then a couple of other stocks to consider, would be, first of all, Martek Biosciences, symbol MATK. This stock is below all these declining moving averages. We've got the 10 below the 20, which is below the 50. They're all declining. And it looks like the stock, to me, ought to make it down at least towards this $22 a share level, which is 90 cents away right now. It might not seem like much, but what we're going to look for is actually less than that. We're going to sell it short on weakness below 22.80. That's what I'm going to consider doing. And then put my stop at 23.07. So that'd be giving us about 27 cents of risk for the potential to see a $22 stock. That would be 80 cents of opportunity, risking just 27 cents. So on risk-reward basis, I think the trade makes sense. Let's take a look at two other stocks that might have some potential to go this week, and that is, first of all, CYD. We've looked at this one a couple times. It might need to break above this trend line here at about $8 a share, but the CYD, China Yuchai International, it's got some resistance up in that area as well. But we're seeing nice volume on these rallies, low volume as it starts to digest those gains. If this 10-day moving average might poke up through that 20, it might get it going again. So keep your eye on this stock this week. No specific recommendation. CYTC, on Brett Steenbarger's blog, I saw a link to a company that predicts earnings surprises, and CYTC was up on the top of that list, and the stock looks great. So news and surprises tend to follow the trend. I would believe that most likely they are ready to surprise on the upside. It looks like maybe it needs to get above 29 bucks a share for the buyers to take control. So no specific recommendation in there again, but CYTC might be one you want to keep an eye on this week.